Welcome, everyone, and with me tonight, my very special guest. This is a privilege to have Mr. Arch Crawford. Arch Crawford from Crawford Perspectives. Folks, we're talking one of the number one market timer from 1970 to 1981. He was right 9 out of 10 times in his major predictions that were posted in major publications. His list of credentials, folks, is a little too long to even mention for this one-hour radio show. We got credentials, Kiplinger's magazine from 1977, quoting him as one of the top-ranked traders and predictors. And we want to make a warm welcome to Arch Crawford. Folks, if you are not really familiar with this man, he's not your average technical analyst. He has a different twist. And we're going to let Arch talk tonight about how he has become one of the world's foremost experts. And as we have Forbes newsletter, and we have CNBC, and we have 2020, and all the other news medias that have actually seen and had him on their shows and prove how right he is, I think it's going to be a real treat for us to listen up. If you're not familiar with Arch Crawford, get familiar with him. Let's welcome him right now. Arch, welcome to my show. How are you tonight, sir?
Very well. Delighted to be here. Thank you.
Well, thanks for coming on. Your form of specialty of analysis is a little different. So could you explain to my listeners exactly what it is you do and how you come up with all these phenomenal market timing events that you have done?
Well, first let me explain that the top technical guy on Wall Street was Robert Farrell at Merrill Lynch, and he retired a couple of years ago, and I was his first assistant from 1961 to 64. And so I have a thorough grounding in normal technical analysis numbers. Now, while I was still there in 1963, the Wall Street Journal came out with a front-page article about people who were calling the market using astrological or astronomic cycles. And I was young and impressionable. I thought that was a hoot of an idea. So I ran out and bought the works of the three people mentioned on the front of the Wall Street Journal, April the 16th, 1963.
Wow.
And the most credible one was Lieutenant Commander David Williams, who was a lieutenant commander in the big war, the World War II, and otherwise had been head of the Consolidated Edison company, the lighting company, electric company in New York City. He'd been head of their purchasing department for 40 years. So he was no crazy, lunatic fringe sort of person. So I went out and bought his booklet called Astroeconomics that he'd put together in 1955, and he later expanded it into a major book called Financial Astrology in 1982, which is still available.
I mean, it is available. Where would people pick up that booklet?
Well, the original publisher is American Federation of Astrologers in Tempe, Arizona, but you can buy it on my website. They just reprinted it for the first time since then. I'd been begging them for years because it's my favorite on the topic, and I don't know why they wouldn't. Finally, I said, look, if you'll reprint it, I'll buy 50 copies and maybe 100 if I can get a deep enough discount. So they finally reprinted it just in the last couple of months.
Well, folks, if you're interested, go visit Arch's website. It's crawfordperspectives.com. But we'll have a lot of time for that. We have a whole hour to not only find out who Arch Crawford is, how you got into the business, and what you did to learn to get better at analyzing the markets in this form that you are such a specialist in. Arch, you got a hold of this book. I mean, you started in the business, obviously. This is back, and you got this book in 1962. And you were, 4 years old when you started to read. So, that was approximately 44 years ago. So you're not that old. You've been in the business a while now.
I was already Bob Farrell's assistant at that time. Okay.
So he recruited you right out of kindergarten, correct?
I was 20 at the time.
Okay. So you've been doing, you just happened to be at the right place. How did you get a hold of, how did he recruit you? I mean, how did that all happen?
Well, actually, I had worked I was working at Merrill Lynch just marking a chalkboard because I'd been interested in the stock market from the time I was 13. And I was attending the University of North Carolina in math and physics, but I was spending a lot of time over the library looking up stock market stuff. And I saw my grade point average going from, A minus to through the B's, and I was heading into the middle C's, and I figured I better get out of there and do what I wanted to do.
Okay. But you had a background in mathematics, and it's funny because a lot of your big top traders in this world are all, a lot of this stuff is all mathematics, Fibonacci, and, looking at percentage corrections, extensions, and pivot point calculations. That's one of the things that I tried to show people how to incorporate.
There are 2 or 3 of the people that are very good in this business who are actually in the missile development, configuring missile, trajectories.
Okay.
Of course, I was figuring trajectories for artillery when I was in the Army.
So you really have been looking at, and that's one way of predicting where things are going to end up. So you got to kind of be a little bit right on that. And you were able to apply that to the markets, or it took years of work of finding other information?
Well, when I started at 13, I started keeping stock prices of everything under $10 during the A's, the B's, and the C's. And by that time, it was in the mid-50s, and it was already too many, so more than I could handle. But my orientation was technical to start with, and these big, heavy books on fundamental analysis, but the fundamental analysts didn't seem to be doing any better than random. So if you actually go back and check the records of a lot of the Wall Street analysts, some of them have good periods and bad periods, and of course, when the market's going up, generally they have good periods, but depending on, there's group rotation within, one bull market may be here, one bull market may be 5 years ago, and the next 5 years from now, and in the meantime, it's different groups that run each time. So fundamentalists should be able to pick it, but they just happen to be in the lucky group when that group runs, and they don't seem to. There's a very small handful of them that know a lot, and I respect those people, those fundamental analysts. But as a class, I can do without them.
Wall Street, even to this day, doesn't like the word technical analysis, let alone put the astro in front of it. That's just something. And then back in those days, you had to been a serious outcast. Were you a closet technician? Did you have to do this stuff at home, at night, away from the office? How did you get into the technical analysis aspect of analyzing markets?
Well, actually, when I was marking a chalkboard in Raleigh, North Carolina, one of the guys there bought for me the Bible of technical analysis, which was called the Technical Analysis of Stock Trends by McGee and
Edwards and McGee, right?
And I think one of those gentlemen had married the daughter of one of the only fellow who had written the classical book on technical analysis in 1932. And that's how they got into it.
Okay.
But so they were getting the 600 charts service that is now at Standard & Poor's.
Hey, Arch, we're going to break for commercial. Hold on to that thought. Folks, okay. Join me when we get back. I have Mr. Arch Crawford from Crawford Perspectives. Arch is one of the world's foremost leading experts in astro-technical analysis, and we're going to get into discovering exactly what that means. We're going to have a little bit of background on him. Keep in mind, this man is one of the country's top-ranked market timers, and that's not a self-proclaimed title. That comes from a lot of testimonial and a lot of different publications like Kiplinger's and Forbes, so stay with us. Listen to this man. If you want to learn truly how to get better at trading and investing to improve your life, listen to this guest in tonight's show. We're going to be right back. This is John Person with Arch Crawford. CrawfordPerspectives.com is his website. Just to give you an idea who this man is, Crawford Perspectives ranked #1 for the first half of 2002, and then #2 for the full year. from Timer Digest. This man is a serious analyst. He puts out probably one of the hottest newsletters on market timing in the last 40 years that he's been around the block, and he started on New York Wall Street. We're going to listen to his story. We're going to listen to how he got into the business, what influenced him, and what he uses right now for his market timing. Arch, welcome back to the show, my friend.
Well, thank you.
You know, that's quite an honor to be tracked. I mean, again, at the beginning of the show, Arch, I said that your credentials, it would take, I mean, we don't have that much time. We have an hour show. It would take too long to mention all of these. But the bottom line, you were introduced way back when to Edwards and McGee, and that's a book that keeps coming up with some of the top industries, traders and analysts. I, too, my first book that I ever saw was that book, in fact, back in 1980. You may not know this, Arch. I worked with a guy by the name of George Lane who developed stochastics. I got in the field of technical analysis, but your field, way different. You deal with timing, and how did you get into the astrological aspect of it?
Well, first let me finish that I was working at Merrill Lynch in Raleigh, and they were getting a book of charts every week. I think it was trendline charts.
Okay.
And that's now owned by Standard & Poor's, but it was a private group when I was there. Anyway, I'd go through all the 600 charts and draw lines and support levels and trend lines and all of that, and the next week I'd get them, and they'd come into Merrill Lynch again, and I would see what happened and if it worked the way I thought it would work. If it didn't, why didn't it work that way? So that's what I got my very thorough grounding in actually studying the charts myself with the technical analysis of stock trends in one hand and the charts in the other hand. But then I asked them to transfer me to New York, and I was just a clerical there at that time, and they said, "Don't be ridiculous." Well, they finally got an electronic board, and I was in the back office helping out for a while, and I finally said, "I quit. I'm going to New York and look for a job." And they said, "Don't do that. We'll transfer you." So Merrill Lynch sent me right up. They said, "What department would you like?" And I said, "Research, technical, whatever." So they sent me up, and I was doing very basic clerical sort of stuff in the statistics research. Mainly we were checking numbers that their fundamental analysts were putting out. And also I was drawing the weekly charts of all the industry specialists. They have 45 industry specialists, and they were not interested in technical, but they did want to have a record of what their stocks have been doing. So let's say what it's been in this range or whatever, what's it been doing the last 7 or 8 years. Is it on a downtrend, uptrend, whatever. So they could use that. But of all the 45, there were only 2 or 3 that would come and ask us an actual technical opinion. Anyway, so I was spending the evenings. I made a deal with the librarian there. They had the second largest business library in the country. I think the first was Standard & Poor's and the second was Merrill Lynch. And the librarian took a liking to me, and I could stay in there and work. I was doing 10-day moving averages on every number in Barron's and the Wall Street Journal up to midnight, and then I would close the door and go home.
Wow.
Well, the technical guy knew that I was...
What an opportunity. I've got to inject that. What an opportunity to have that type of information at your disposal. Oh, yes.
It was mainly just I was using the old Wall Street Journals and Barron's, and I mean, you can get those in a regular library, but they also had, a tremendous range of other information. For instance, they had the quarterly books from the Cycles Foundation, which I found tremendously interesting. And, of course, the technical department was taking the newsletters from Lowry's reports, which started in 1936.
Sure.
And they had...
Paul Desmond runs that now.
Yes, he does.
And he's the head he's founded the MTA, folks. A little bit of trivia for you. He was one of the founders of the Market Technicians Association, which, by the way, another credential for you, Arch. I believe you're a CMT. Is that correct? A Chartered Market Technician?
I'm actually have never gone through and gotten the CMT, but I was there with the crowd that very originally started it shortly after. I think I went to my first meeting in 1977.
Well, maybe you have an honorary. We better go on their website and check it out. But I think they're giving you an honorary, and maybe you don't know that. But
it's possible.
Well, I'm sorry to interrupt, but that's just fabulous. I mean, I don't think that people are getting into the age of technical analysis right now, Arch. It is just, I mean, it's so vast, and so many people are now participating in investing that there's just so many different ways to go, and we keep finding that we're going back to the original books and the original thinking from masters back in the, early 1910, 20, 30 era. And this we're finding is something that you started your grassroots on, and that's why I just really think it's neat. Now, folks, I hope you're listening to this, because I think the point is, it pays to do your studying even from the old stuff. Right.
You were asking, even the technical analysis was considered voodoo and tea leaf reading back in those days. Bob Farrell finally talked to his boss and got me in as his first assistant. We were over behind the telephone room, which was just a telephone switching room, so only people who came down that hallway were looking for the telephone room. And if you looked down it, you could not see that we had dog-legged off to the left and then straight ahead again, so that's where the technical department was, and Merrill Lynch was advertising, throw away your charts, Charlie, and come to our right-thinking fundamentalist research department. But because there was an interest in it, they had to keep one or two people there to answer questions on technical analysis. Now, when I first got in there, we were receiving about 20 to 22 wires a day from all of the Merrill Lynch offices. What's the technical opinion AT&T? What's the technical opinion IBM? And we'd write them back, say, well, there's support here and there's resistance here. If it breaks down here, it'll go 3 points more. If it breaks up here, it'll go 4 points higher. So that kind of analysis. We were fortunate enough to have a wonderful charting service that was on microfilm that had 1 point reversal, point and figure charts, 1 point, 3 point, and I don't know, half point or quarter points, whatever you could get, and regular daily charts, weekly chart, and monthly chart on the line or bar charts. So that was like $5,000 a year, and we could look up any stock on the New York or the American, and it would have all that data updated weekly.
Wow, a lot of work. So that was really your start. Now, how did you evolve into the astro analysis?
While I was still there, an article came out on the front page of the Wall Street Journal, April the 16th, 1963, and it had stories about 3 guys who were predicting the market using astrology, and they were doing very well at it. And I think I mentioned the most credible one was the guy from Con Ed, who had been head of their purchasing department for 40 years. So he was no flaky, crazy person, so I ran out and bought his booklet, which was Astroeconomics, written in about 1955, and he later expanded that into a major book in 1982 called Financial Astrology. Well, I also...
Is Financial Astrology still available to this day?
Yes. As a matter of fact, it's just been reprinted.
Okay.
I've been begging them to reprint it, and
do you have it through your website, Arch?
A couple of months ago, so I now have it on my website.
Cool. Folks, listen to this. If you're interested in this book, it's crawfordperspectives.com. So you get this pamphlet, you look at this paper, and then how did you start looking at astrology?
Well, I also got, next to it in the bookstore in New York was Stock Market Prediction by Donald Bradley, and that was how to build a model using only planetary statistics that would often predict the direction and the amount of the move of a stock market move. And the stock market, I started keeping that, and I kept it by hand, which, thank God for computers, it took a lot of time. Mm-hmm. I calculated the Bradley model for about 5 years before I got drafted.
Wow.
But anyway, so the Stock Market Prediction by Donald Bradley was 1948, and then I got a book with planetary positions going back to the 1800s and up to the 1970 or so. And a cursory examination showed that it was likely to be very significant. But it wasn't until a few years later that I had the time to go over and actually calculate various of the planetary cycles in percent changes in the Dow Jones. Then I would add them all back together and get some sort of a projection that very frequently works.
And so then that leads us to about what year now?
Well, I started the newsletter actually in '77. Had written a couple of pieces on it, on the cycles that I was beginning to follow. I did not mention astrology. I said I've developed a new method of looking at the stock market, and I'm calling them, instead of exact equal circle times like, the 20-week cycle, the 40-week cycle, the 80-week cycle, I said these are elliptical cycles, and they're not quite equal time because sometimes they'll narrow and sometimes they'll spread out. So I called them elliptical cycles, and I didn't mention astrology. And I had written everybody I knew on Wall Street, which was quite a few, that I was looking into this kind of analysis, and a few people encouraged me to start a newsletter about it. Well, I wrote a couple of times on it, and from early '75, when I got back from Vietnam and I got through everything else that I was non-stock market stuff, I just got back to trading stocks in Carl Icahn's office.
All right. Hold on to that thought. Folks, when we get back, we're going to break for commercial, talk more with Arch Crawford and how he entered into the realm of the analysis that he does to this day that makes him so famous as one of the world's leading market forecasters and timers. Join me with Mr. Arch Crawford. Welcome back, folks, and with me, Mr. Arch Crawford, one of the most innovative ways and methods, and the man who is so unique in his methodology of trading and analyzing the markets. We're proud to have him on this show. Arch, welcome back.
Oh, thank you.
So we left off talking about elliptical is how you mentioned your analysis, rather than telling people it was based on astrology and cycles. And at what point did you, that was back in the late 70s, at what point did you finally have to, let's say, let the cat out of the bag?
Well, this was about 75, where I was, actually, let me go back a little bit. I finally met Lieutenant Commander David Williams when he was speaking in New York in 1974. And if you remember, 73, 74 was a devastating long-term bear market. And a lot of people got out of the business at that time because of just the general devastation that was taking place. Anyway, he was speaking at the Society for the Investigation of Recurring Events, which had originally been the New York chapter for the Foundation for the Study of Cycles, and he was one of the directors of that organization and was speaking there. And he said, I think the market is going to bottom in the next month or two, and this was September, and the market double-bottomed in October the 4th and December the 9th of 1974, and took off on the great bull market and never looked back. So he died very wealthy at the age of 96.
Wow. What a shared memory. Thank you for and listeners, I hope you got that. Lieutenant Commander Williams, and was the one that pretty much launched your career, correct?
Yes. Well, what launched my career?
At least your interest in this form of analysis.
Yeah. One of the guys there at that meeting was a broker in Carl Icahn's brokerage house in his shop, and I ended up opening an account there, and I was sitting up there trading options in early 75, and I traded 23 passes in a row without a loss, and Carl Icahn offered me a job as a trader. But he was terrible to his people. He would yell at them, and, very acrimonious sort of person.
Uh-huh.
So I did not take him up on that. And but his chief trader, Eddie Thomas, Fast Eddie, introduced me to a trader at another firm from North Carolina, was a North Carolina firm, Interstate Securities, and Frankie had made $20 million for them and $20 million for himself. And he took a very great interest in me and encouraged me to make my brief little writings there into a. He said, "Go on and get registered as an advisor, and do a market letter." I'd buy it. So he became my first client, and I did get registered in March of '77, and the first letter came out May the 24th, 1977.
Wow, congratulations, Arch. Seriously, congratulations. Obviously, you're doing something right because you're still doing it. You have quite a following, and you've made some right and really good calls. And, of course, the print media, and not just any print media. We're talking Barron's, Forbes, Wall Street Journal, give you credit for that because you're open to the public on your predictions. Mm-hmm. Coming into the show, we've talked a little bit about the form of analysis that you studied, and we talked about what books you first got you into the business. The big question is that you've been in this business this long, and you've been doing so well. What do you perceive, or how long do you perceive continuously doing it?
You mean into the future?
Yeah.
Well, I love what I'm doing. I don't intend to stop doing it. The three old guys in the business right now are Richard Russell, James Dines, and Joe Granville. And I know that Richard Russell, I think, is turning 80 this year, or was last year. And Joe must be 80, 81, 82. James Dines, I think, is a little bit younger, but I like I love the markets. I love giving my opinions, and I particularly like being right.
The markets of your particular interest, and obviously people want to know about the equity markets, gold, interest rates, and crude oil. Can you discuss some of these items with us tonight?
Yes, I was trading gold for a living for 3 years as I was beginning to get my market letter going. And I had a fellow on the floor that was handling my account, and I was trading a very small amount. I had very, very little money, but I was making 250% a year for 3 years, and then it started running up in 1979, hand over fist, and I could not keep up with the margin requirements at that time, and they went from 1,000 to 3,000 to 5,000 to, I think they ended up around 20,000.
Yeah, that was when gold went a little over $800 an ounce.
Well, I think it was like $884 intraday, and closing high was like $875 on January 20th, 1980, with the Sun and Mercury conjunct at 0 Aquarius.
Well, let's ask you that. What does that exactly mean?
Well, some astrologer, I never believed very much in the meaning of rulership, like this planet rules that metal, or this planet rules that stock group. And I said, that's a bunch of horsepucky. Who cares about that? And these astrologers were telling me that when Saturn went into Leo, the price of gold would drop because Leo rules gold. And I said, yeah, right. So I kept an eye on it, though, and the day that Saturn went into Leo, the IMF announced that they were going to sell tons and tons over years and over months and months, and it was the only down limit day of that year. So I began to take a little more notice of that.
Yeah, I started to pay attention a little closer, okay.
So that kind of won me over.
All right. That was a neat little hint.
Yes. Then another thing that I noticed just running a lot of statistics on it was that when Mars goes into its apparent backward motion, well, we'll take that up after the break.
Yeah, we're going to break for another commercial. I'm sorry to do that to you, Arch, because that was something. Folks, join us when we get back. Mr. Arch Crawford, we're talking about astrology and incorporating it with technical analysis for timing market turns. And if you're not convinced, just let me mention that Arch Crawford is probably one of the world's top, utmost documented market timers in the last 40 years. Arch Crawford, Crawford Perspectives. We'll be right back. That's right, he's bad. We've got Mr. Arch Crawford, folks, and he is probably one of the country's leading market timers. Here's just a quote, if I could. I don't mean to embarrass you in any way. Just don't want to get your ego too inflated, though. But let me read this. Today, Crawford creates a unique blending of astronomic cycles and technical research in Crawford Perspectives. That's by Timers Digest. We have Forbes Newsletter Watch saying, believe it or not, financial advisories that use astrology to time the market have performed exceptionally well over the last 3 years. One top-performing service is Crawford Perspectives. These are some pretty top-notch people giving you some pretty top-notch kudos. Arch, welcome back to the show. Arch, carry on with that story, because it was really a treat.
Well, there's a point in several of the planets where we pass them and are going faster, and it makes it look like that planet is going backwards, although in fact it is not, of course. And when Mars turns from going forward to going backwards, it's called the Mars stationary retrograde. And then at the other end, it turns stationary. It stops dead in the sky and then appears to begin to move forward again. And I found that at those times, gold had a tendency to drop down into the station and rise sharply right after the station. And one of the times I had told my guy to bet the downside. Sure enough, 3 days it went down more than usual into a station of Mars. And I went on the floor and I had lunch with him that day, and I said, well, this is where we should cover and go long. But there were all these traders on the floor were yelling 1,000 to sell, 2,000 to sell, 500 to sell at a certain price. But there was no trading going on. They were not actually selling. They were just holding the price at a certain level of the gold. And I said, okay, cover mine and buy long. And my friend turned white, my broker, but he did it. And sure enough, 3 days later, it had popped all the way back up. But I read in Wall Street Journal like a week or 2 or 3 later in an obscure article, and this was not front page, that Germany had been renegotiating a loan to Italy where the collateral was in gold. And they knocked the price down to ask Italy for more collateral.
Interesting.
And that's not the kind of thing they teach you in business school.
Fair business school. In fair business practice, that would not be the subject chapter that you would have been studying. Arch, so let me, if we could, this starts to intrigue you, and hopefully it's very intriguing to me. And most people, are going to have a hard time listening to the radio show, saying, "Okay, what when the sun and the moon and this and that go?" How people can subscribe to your newsletter, and they can go to your website. They can also find more information through your website. Correct?
Yes, there's a number of a handful of books for sale there that some deal with the astro cycles and some deal with technical market analysis. Also, there's articles of very great interest. For instance, there's an article there about the currency traders of the Bank of Japan. It says they come in the morning and they look at these figures, they look at those figures, they look at what happened overnight in the foreign markets, and then they look at the astrology. Then there's another, I've been talking about the planet alignments around the sun change the electromagnetic fields of the sun and of the earth, and that affects stock prices. I've been saying that for years, and last year an article was written by the Federal Reserve Board of Atlanta about electromagnetic changes in the Earth's field affecting stock prices worldwide. That article is on there.
That's very interesting. What are we looking at now? What do you think? I mean, are we in a situation, and you talked about gold. What's the outlook for gold right now?
Well, we bought long on the gold April the 5th of 2001 when Jupiter and Neptune were in a a pleasant angle with each other, and that tends to be lows in gold, and when they're in a hostile angle with each other, it tends to be highs in gold. So we bought it there, and we've stayed long pretty much through the entire period. We bought at 258, and it ran up to 430 a month or so ago, and has pulled back down to, I think it closed today at 388.
Correct.
And I think there's going to be a tax against the dollar in the next month, in June, that will drive metals prices higher, probably most commodities higher again. We had the commodities running pretty wild earlier this year, and because China has come across with they trying to cool off their own economy, and that has cooled off all the commodities very, very quickly, and perhaps a little bit too much for a normal market pullback. But I think they're going to run again in the month of June. So
which is a week away, pretty much.
Yes.
Okay. So do you, like you had mentioned earlier, that there was a certain position, astrology position, that gold would go down first and then springboard back up. Are we in that type of situation?
We're not in any of those major things right now, and I believe that we've already completed most of a technical pullback. We could go straight on up now, but I have the next date as a buy point as June the 12th. So as a strategy on the gold, I like to keep a buy stop above the market,
okay,
above maybe two technical levels up, like a moving average and a downtrend line and a resistance level, and put a buy point above that and keep it on the floor with the broker, because when it pops really fast. So I'm keeping all the long-term positions, but short-term trading, I may go short in the next day or two and then buy it back and go long in early June.
Okay, so you're aggressively trading, but you're definitely looking to buy breaks on gold for the longer term. Folks, we got one more commercial here.
Holding the longer term.
Okay, great. Holding gold long for the longer term. Arch, we're talking about gold. You think short term we may see a little bit pullback for the next few days, but going long, holding the longer long-term positions and looking for gold to advance higher this year so far, correct?
Correct. Okay, well, I believe, well, we had this 20-year bear market in commodities in general, and I believe that when we have the technical opposition to that the trend should last at least 6 to 9 years on the upside against the dollar at least, and perhaps in several currencies. So I like the commodities for the long term, particularly the metals, but I think a lot of them will do as well. Just anything. The thing is that the cycle has to do with financial products versus real things like commodities. So the financials, I think, are not going to do well the next 2 or 3 years, and the commodities and the things in the ground, the metals and the oil, will do very, very well. I'm a little concerned about the oil. It is following the cycles better than the gold right now, and it is continuing to make new highs, and that shouldn't be a surprise considering how many of the administration are oil people, and they already did it to California.
Huh.
So now they're going to do it to us. But in terms of the stock market here, I have astrological cycle reasons to believe that we have the best chance of having another market crash in the period beginning August the 18th and ending March the 23rd of 2005. That there will be sometime in that another significant crash in the stock market, and that the most likely period for that will be mid-September through October and into November of this year.
So we want to be on alert for that, and that would absolutely be probably pretty positive for gold, right?
Well, it might be. Sometimes the cycles in gold are with the stock market, and sometimes they are opposite the stock market, and that usually depends on the level of inflation. If inflation is better than 3%, the gold will go opposite the market, whereas if it's less than 3%, the gold stocks will go with the regular market stocks.
What's your predictions?
I'm holding the gold for another 8 or 9 years. You can
Okay, well, that's, putting your money where your mouth is. Arch, gold comments, Venus crossing June 8th?
Yes.
So
this Venus is crossing the face of the sun for the first time in 122 years. And the Hopi Indians have a single family that their job is to have one member run along the ridge at sunrise, and if they see this spot on the sun, they're supposed to go tell the elders, and it's not supposed to be good news. Now, actually, the Hopi Indians are not going to see it because you can't see it this far west, but if any of them happen to be in Europe or on the East Coast, you can actually see the spot on the sun at sunrise on the morning of June 8th.
What will that mean for the markets?
I think it's long-term, it's very, very bad. It enhances the probability that we'll have a problem later this year.
That's the equities?
Yes.
And for gold?
I believe in this particular case that it'll be positive for gold and for all.
Well, we've got a lot of people looking about June 8th because Belinda asks, Arch, what do you think the effect of the inferior conjunction between the Sun and Venus will be on the market? Ceres begins June 8th again.
Well, that's the thing again. That is a big deal, and it's the first time in 122 years, and I believe it will mark major things happening in the geopolitical situations. I don't know if you want to go into the fact that every president elected in the 0 year has died in office, and I don't know if George will make it to November or not, but he could die in a second term and still meet with the prophecies.
Well, that would have to be another show because we're going to be running out of time, and I wanted to get to one more question if I could. Kareem in Decatur, Georgia asks, what does Arch think about the technical aspect of the S&P 500, the Dow Jones 30, and the NASDAQ? And I think you've kind of answered the question. Not looking good going past August. But what was that date one more time?
Well, one of the things that I look at, a lot of the traders use the 50-day moving averages and the 200-day moving averages on the major indices.
Okay.
And so you can tell if the 50-day moving average is rolling over to the downside and the price is under the 50-day moving average, then the 50-day breaks below the 200-day, and then the 200-day moving average turns down. Then you're going to have, that's the indication that you are in a bear market, where the 200-day moving average is the highest, the 50-day moving average is the second highest, and then the price level is below both of them, and all the moving averages are going down. That is the indication of a bear market, and I think we shall see that in the next month or two, rolling over and then tanking big time later in the year.
Arch, thank you very much, folks. This was Arch Crawford. I don't know where the hour went, but we're done. Tremendous information. Arch, thank you very much. Folks, go visit Arch's website. That's www.crawfordperspectives.com from Crawford Perspectives. Arch, thanks again.
A pleasure, sir.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and trading techniques by industry leaders. It should not be considered as a solicitation to buy, sell, or invest in securities, options, or futures. Remember, trading does involve the risk of loss. Past performance is not an indicative of futures results. Futures and options is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.